when you're looking for stuff that's high probability, you want speed and you want direction. You don't want any kind of consolidation. You don't want pullbacks. You want them to run straight there. And one of the main market mechanics is consolidations bring retracements and reversals and expansions. So either way, after a consolidation, you generally move somewhere, whether you create some kind of continuation, right? So once you've created that consolidation, you have to do something. Even worst case scenario, you break out again lower and break out again higher. But it has to be some form of breakout, continuation, or reversal, right? When we see a scenario like this, or when we can plot a scenario like this, finding a consolidation and finding consolidated environments, then we can start planning for breakout trades, right? The key is to not be in an environment that's consolidated on the higher time frame. On the higher time frame, we want some kind of movement. And then what we're looking for is, like in this example, that pause, right? That pause on the higher time frame, say that this is like a 4-hour chart. We're looking for these signatures that I'm about to show you in areas like this. So on the higher time frame, that's what it would look like. But say that just the circled area we're looking at on the 15-minute, right? It's going to look something like this. One of the things that I've come to like, and I guess I'll go over three, is I love looking at just candlestick patterns. I'm a traditional price action guy as far as just analyzing price action for price action's sake. But I do think that price has certain signatures to it, and it does certain things on certain days for certain reasons. And one pattern that really stuck out to me was one of Larry Williams' books, and it's called an inside day. You have a normal candlestick, say that it was bearish. What you want to look for is a day that does not exceed the higher low. For example, say there's another day, we close there, we open here, and then the wick didn't go past the low, and it didn't go past the high. Then we identify those days, right, in the inside day. Now, again, it has to either break out and continue, or it'll run there and then reverse. So that's one of the first tips. So let's go find an inside day. So here's an example right here. We had this high and this low. You see it did not, we're on a daily chart, this candle did not go above it or below it, just bounced around. Now that level is going to be sensitive right here. And so we run that low, and check this out. When we run that low, we turn around, and where do we go? To the high. And then so. So this inside day right here created a swing. And so this green line, it starts on Monday. So we had a large range on Friday. And then right here on Monday, we had a consolidated range, an inside day. Price traded down, took out the inside day low. That's Tuesday. Right there's Tuesday low. Makes the low of the week 70% of the time. And we know we've just had an inside day. And look at the liquidity. It's fast. It has a lot of speed. Runs to that inside day and then accumulates a little more, goes up and takes out that day before the inside day. And there, you can look at, for example, an outside day where it takes out the high and low of the previous day, right? It's outside both sides, but inside days are really strong turning points. And you can even see on the higher time frame, we have this swing here, and then the next week they turn it around. So you could even trade still off of that level and use that as context, looking for that double bottom. So that's the first tool. Now, this next tool is more so indice specific. It's not really, it doesn't work as well with Forex, but it is a pretty cool tool. And we'll go through a couple of them here. What book is it by Larry Williams? That's long-term secrets to short-term trading, I believe. Not 100%, but I think that was the book that it was in. I came up through a lot of ICT concepts. So that's kind of how I think about a lot of ways of trading. And one thing that he teaches a lot on is the weekly range and kind of how you expect price to move. Now, there's multiple weekly ranges, but the classic weekly range is Monday, you trade down, Tuesday, you trade down, and then Tuesday makes that low of the week, and you spend Wednesday, Thursday, and maybe some of Friday creating that high and then pulling back down for Friday's close, right? This is just a classic week, Tuesday low of the week. Now, what I generally look for is the low or the high of the week, one of the two, to be made on Monday, Tuesday, or Wednesday. And I put a little bit more emphasis on it when it's Tuesday and Wednesday, depending on the market and everything, right? But so we're looking for weekly ranges. Now, think about this. If we open at the beginning of the week and we trade down and we trade up and we trade back and we close at the exact same price, we didn't go anywhere. So again, going back to what we talked about earlier, what does that mean about this week? Most likely consolidated. It opened at the same price it closed, at or near it. So it's most likely a consolidation. What does that tell us about next week? Back to what I was saying earlier. It means that there is likely to be either a reversal or some kind of continuation. Right? Consolidations bring movement. Now, like I said, right, I want to reiterate this. You don't want to pick a market that is completely consolidated. You want to find a market that's doing well, or at least has some kind of trend on the higher time frame, but is consolidating on the lower time frame. You want to see a pause, right? Remember, we talked about that move. On the higher time frame, you're just going to see this, right? Here's an example. This week, we open here, trade down, trade up. This week, we open here, we pretty much close at the exact same price. What happens the next week? Bam. Right? That consolidation on this week brought heavy and fast movement the next week. That's the kind of stuff we're looking for. So, one of the tools that I've used to kind of help me with that understanding or that method is looking at the open of the week. So I look at midnight, New York time or Asia close, and I drew a line right here from Monday, Tuesday, Wednesday, Thursday, Friday. So it just draws that opening price from the week all the way down. And so now I can just glance at this and go, okay, Monday was the high of the week. Tuesday failed, went lower. Wednesday failed, went lower. What I like to see is I like to see 2 weeks, and this is just on US 30, whenever weeks are within 100 points of each other, that's generally pretty good for some large movement. So right here, it's just out of range. This one will be okay. It's 111 points. And again, why is that significant? Because that means that this week opened, it traded down, traded up, and then closed. It pretty much didn't go anywhere. Then the next week opens right here. So what does that tell us? This was a consolidation. It runs down. Even look at that. If we extended that line out, it comes right back to that liquidity. Fast, sharp movement, right? Let's try to find another one. This one doesn't look as good. That one's about 280 points. This one's nice here. probably just over. So this one's 109 points. So here's Monday. Tuesday goes down and forms the low of the week. Look at Wednesday. Can't break Tuesday's low. Bond open. Can't break the low again. We take off. Where do we close at? Compared to this open, we closed about 92 points higher. So this ended up being about right. And look at this week. Monday goes up and makes the high of the week. Tuesday can't do it. And look, fast movement, sharp. From the open of the week, by Thursday, it moves some 785 points. And again, what's an ideal week we want to see? Tuesday, we generally want to see it form. If it's a bearish week, the high of the week. It doesn't. Obviously, it's in a hurry. Why is it in a hurry? Because we were consolidated last week. So it's creating that move, and then look at Friday, pulls back into the range. Let's look at one more. So see, these are really far away. This is a long range week, and then look at the next week. This one's pretty consolidated. Right? We range, and then the next week is a consolidation. We consolidate, and then the next week gives good movement. These are close. Let me see if I can find one. It's ideal if, like this one, this is what I'm looking for, if they're on top of each other. This one had 3 weeks, 4 weeks. So see, we were in a heavy consolidation here. The opening price was almost the same for 4 weeks. And then right here, we finally get that last week and a large range running away from those prices. A large move, right? Headed away from that consolidation. And it also respects it really well later in the week, a lot of times too. Right there, Tuesday, low of the week. And then look, Wednesday, Thursday comes right back, smacks that low. See if we can do one more. This one here looks close. Don't know if that's 100. No, that's a little far. This one's perfect. This is what you want to see. It opens identical right on top of it. Second week, look at this. Monday makes the low. Tuesday tries to get it. It can't. Forms the low of the week. Really, ideally would have liked to see Friday pull back lower, but still that's plenty of room in there. Cool. So does anyone have any questions about any of these 3 methods? Yeah, Arun, you like that, bro? I'm glad I'm glad you like that, bro. Appreciate it. It's some it's some good stuff, man. It's good stuff.
Yo, Tyler, was good, bro.
Yo, what's going on?
It's been a while. I just missed out on all of that. I think were you talking about new week opening prices and stuff, or what was that?
Yeah, I was
Just got
talking
off.
about how to spot high probability moves.
Dang, I missed that. Well, this is recorded, so I'm guessing
Yep,
you're gonna post it. Okay, on
exactly.
YouTube or in here.
I'll definitely post it in here. I might post it on YouTube as well.
All right, sounds good. Thank you.
An example on gold of the weekly. Yeah. Also, we're about to go over it here in just a sec. If anyone doesn't have any more questions about that funding thing I was talking about this morning, let me pull up the weekly and then I'll go ahead and here would be an example here. These are about 26 points. I wouldn't do more than 100 on gold, more than 100 points. Right here, you can see a very flat week, opens pretty much the same as the closing price. And then we open here. Monday makes the high of the week. Tuesday tries to take it out. It fails. We get that sharp, fast movement lower. Friday pulls back. Here's another one, right? So gold pretty much, it was a very volatile week, but pretty flat. And then we get this open here. It swings pretty fast, both directions, so it would have helped you get in maybe a scalp, but ended up consolidating itself.
So is that a template that marks out the week out like that with the green line or
Yeah, yeah. So right here,
weekly open?
this one, same thing, pretty much opens and closes at the same spot. Right there, Tuesday, can't take out that Monday low, and it turns really fast, volatile movement. Cool. Any more questions? Anyone at all? Just be sure to ask. Drop them in the chat. You can ask out loud. Any more?
Tyler, do you look at that like on a daily basis too, just like with the midnight open?
Yeah, I kind of just glance at it, but like you know, the way that I would answer your question is yes, but the way that I do it is really just based on the weekly. But that makes it when you're using that, because you would get a lot, especially you would get a lot of value out of this as far as when you do that, it helps with the weekly profile like crazy. Like, let me pull it up real quick. What pair? Here. Okay. So let me throw this indicator on. Sorry, it just takes a sec. Okay. So, like, for example, where they open the same or like near. I want them close though. Okay, so like this would be a good one. So here's Monday, right? So daily, weekly open, and then right here is Wednesday, is right there. We run that high, and we could almost think of that like a sell stop. Like if they're getting back into this range, into this open, more than just on a touch and go basis, something over here is probably soft, and it produces that fast movement, so you can capture the volatility. Same thing here, right? These are pretty close, only about 2 points away, 3 points away. And then look, it nails it right there. Look at that speed. And then comes back to the weekly open, speed again, lots of volatility. And it's bringing that move. You can see this one pretty much lines up with the weekly too. Or it was close. Yeah, less than 100 points, right at 92. So this would be considered, this is how I would tell you to use it, is wait for the two of the weeklies that are close, and then throw the dailies on top of that, and it just makes it just that much sweeter.
Right, nice and crisp, so that way you could get in a pretty good
Like,
entry.
yes, bro. Like, look right here. These 2 weeks are perfect. These two dailies are perfect. Look, it runs right
Mm,
below the open, and then shoot.
yeah, and you got that nice push off that breaker on the 15. Oh, this is the
Yeah.
30-minute. Still nice.
hmm And taking it to the next level as far as price action, you could go to the 4 hour, right? We know that these are weeks, so we could say, okay, which one of these is an inside week? So you can see right here, this week, if you got one of those price action patterns, it should really start churning out some volatility, because now you have everything, right? You have an inside week because it does not go outside of these parameters, right? We're on the 4 hour chart, so each week is one of these dividers now. Sorry, let me change this. So now we have a target for liquidity, and we have a reason for it to move with speed. And then this week closes with all the inside days. And then look, Tuesday makes the high of the week, simple, break, retest, break, grabs all that inside week liquidity, fast, volatile movement. And then once it grabs it, comes right back up into that range, which primes it for another move with two close weekly opens the next week. Where do you think they're going? Right back to clear out that liquidity. right? Look at the bodies. They never even cleared it on the 4 hour.
Damn, that was a solid like month on gold.
Yeah. It's all about, looking for the right things like that. But all right, guys, any last questions on that before we go over the funding stuff?
Where's the template, bro?
You just pull up, it's 7 GMT, so midnight New York, and just draw out your line. Really, and then you're good to go. Just do that each week, and then you'll be good from there.
Appreciate it.
Yeah, no problem. Let's see. So let me go ahead and go through this. Cool. Okay, so I'm just gonna bring it through here, and let me see. Is it in here?